Here are the top 5 biggest mistakes investors make. Let's dive in. So, number one is trying to time the market. I get a lot of new investors that will buy stock, and their very next question is, okay, when should I sell it? Well, that's the wrong question to ask. The right question to ask is, how much more can I buy? We have to remind ourselves it's all about time in the market, not timing the market. So, with that in mind, that leads us to number two, which is not buying frequently. What I hear with some new investors is they'll buy a stock on month one and then they'll wait 1 month, 2 months, 3 months, 4 months, and then buy another stock. And that's not going to work with wealth building. You have to be investing every month. So, what we teach at Ticker is try to invest between 15 and 30% of your paycheck and do that month over month because that's how you truly build wealth. Now, if you can't invest between 15 and 30%, that's fine. Start small, but try to work your way up to that. Number three would be let emotions take over. So when the market goes down, a lot of investors can have the tendency to freak out and sell. And this is why a lot of investors lose money. We have to remind ourselves that over the last 100 years, we've had only 19 bear markets or recessions. And on average, they've lasted about 9 months. So this tells us the market definitely goes up a lot more than it goes down. And when it does go down, it doesn't last long. What you should be doing, and this is where more experienced investors really make solid returns, is when the market goes down, they buy more. This is a technique we teach at Ticker called stockpiling. This is actually the number one most important technique. I'll talk about stockpiling in another video, but when the market goes down, keep buying those on sale businesses you see in Ticker, because when the market corrects, that's when you make those big returns. Okay, number four, this is a fun one. Following the advice of gurus on YouTube, Reddit, Twitter, and the list goes on. What I like to do is, and I listen to a few podcasts on investing, and I also watch a few other YouTubers out there, and I love hearing recommendations for new stocks. And what I always do is, well, I'll put it this way, what I never do is go and buy the stock. I always go right to Ticker to cut through the clutter and find out, is this a strong stock or is this a weak stock? And in many cases, these are weak businesses these people are recommending. So I love that about Ticker. It can really save myself a lot of time and anxiety and figure out, hey, is this actually a good business or not? This brings me back to, I think it was a few years ago, everybody was talking about GameStop, AMC, I think Cost was in there. And Ticker was an Excel sheet at the time, so it was kind of manual, but I would literally go punch in the numbers and find out that these are really weak businesses. So I got to show you guys something right now because some people are starting to talk about GameStop again. And I'm like, really? So check this out. In Ticker, GameStop is overpriced. The score is 39 out of 100. That's a really weak business. Margin of safety is 0%. So really no upside potential. So with that in mind, if you ever hear anybody out there say, hey, you got to buy the stock, the last thing you should do is buy that stock. The first thing you should do is ask why. And at the same time, go ahead and check it out in Ticker. Okay, and number five is owning too many stocks. I see this with a lot of investors. They're in wealth building mode, yet they own like 30, 40, 50, sometimes more stocks. And that's essentially creating your own ETF. Just to take a step back, if you're in a position where you want to protect your wealth, you're somebody who is nearing retirement or financial independence, or maybe you sold a business, sold some real estate, or inherited some capital from a loved one, then I highly recommend you talk to a financial advisor, wealth manager, and they're going to put you into an ETF index fund or mutual fund because it's meant to protect your wealth. Your returns are going to be like 6 to 8% per year, and that's fine. Again, it's wealth protection. But if you're still working and you want to build your wealth, you should have a focused portfolio. At Ticker, we talk about owning between 10 and 15 stocks. In my case, I own 10 stocks. And if you don't already know, when you join Ticker, you can see my portfolio so you can see what stocks I own. But with a focused portfolio of like 10 to 15 stocks, you can see some really nice returns, much greater than 6 to 8%. We talk about aiming between 15 and 50%. Those kinds of returns, you can really accelerate your wealth building process. So there you go. There are the top 5 biggest mistakes investors make. If you want, go ahead and comment below on a mistake you'd be willing to share with others. If you like this video, go ahead and hit that like button. If you want to see more videos like it, hit that subscribe button. And if you want to learn more about investing and find some really good stocks, go ahead and join Ticker for free. All right, we'll see you in the next video. Bye for now.